Hello traders, Gary Wagner here just after 12 noon in Honolulu, 6 o'clock in New York. It is Friday. Happy Aloha Friday as we say on the islands. Last day of the month, May 31st, 2019. And this is the daily report for gold and silver, our weekend review. And what an interesting way to end the week. A tremendous upside surge in gold pricing, taking it well above $1,300 per ounce. Of course, a surprise announcement by Donald Trump today that he is going to impose tariffs on our ally and good trading partners in Mexico took the financial community by surprise and sent shockwaves throughout the equities markets. Equities closing dramatically lower, and the interesting thing is that the European markets were closed. We will see some sort of spillover at the beginning of next week. But for right now, we had a very, very solid spike in gold. We had a solid spike in silver. Platinum and palladium did close lower. Let's take a look at our current pricing. Gold closing up $17.80 at $13.1020. Silver also trading higher on the day, about 0.5% at $14.56. Platinum closed lower, losing approximately $1.10, $7.93. And finally, palladium down $41 at $13.24. Traders, there's absolutely no doubt that effective trading is one part science, one part art, and one part luck. In this particular case, we had all three going for us in that we entered a long position yesterday. We'll talk about that trade in detail as we pull up our technical studies. Traders, absolutely no question. What a week we have just seen in the precious metals markets, and what a dynamic move we saw today in gold, with gold closing up $18, currently at $13.1040. And that is, of course, basis the most active August contract. And if you recall from yesterday, we did send out a special trade alert. We got long in this market at $12.93. We will talk about our stop, our trade, as well as our upside target in just a little bit. First, let's take a look at this weekly candlestick chart. We can see the activity that occurred over this week. We had the strong finish closing near the highs of the week. That, of course, happening today. When we take a look at what was resistance, I believe that will now become support. And former support, which is sitting way below current pricing at $12.66, I believe is absolutely an irrelevant number. First of all, we saw this market move from under $12.80 to over $13.10. We saw the majority of this week's move occur today with a tremendously strong double-digit move. Also, when we look at a weekly chart, we can see that major resistance right now doesn't occur really till about $13.50 per ounce. And that, of course, is the yearly high that was achieved mid-February. And that is this top right here. Once again, we are looking at a weekly chart. However, when we move to our daily chart, we're going to see that there's a couple of levels in between that. We'll also want to look at our upside target, as well as talk about where our stop is, and most importantly, where we want to move our stop up to next week. The next chart that we're going to look at is a daily candlestick chart. We do have a fib retracement, and there's a couple of things that I do want to point out. First, you can obviously see that between yesterday and today, we have a price void or a price gap that comes in right here. And traders, this particular occasion where we're looking at a gap is actually an artificial gap, because this is the day that they moved from June to August as being most active futures month. And when we switch from a daily chart that is a continuous contract of futures trading to the August month, which I've just put up, and the representation of that is GCQ19, we can see that there is absolutely no gap whatsoever. The next thing that we want to look at is a Henkin Ashi chart, because that will give us some indication not only of the pivot, but the strength of the pivot and the strength of the trend as it appears now. Now, the first thing that jumps out at us when we look at this chart is that, of course, we had a long candle because of the price move, but we see the absence of the lower wick, we've got solid large body strength. The upper wick is not so important on the way up, just as the lower wick is not so important on the way down. But judging by the size of today's candle, as well as the fundamental reasons this market spiked like this, which is that President Trump, in a surprise announcement, said that he would be adding tariffs now to Mexican imports, I would not be surprised to see this market follow through with a solid gain in trading next week. And traders, the last chart that we are going to look at on today's show is this weekly chart. It contains an Elliott wave count. It contains Fibonacci retracements as well as a Fibonacci extension. We are going to use a combination of all of those factors to look at where our stop should go, where we are currently sitting in terms of our current trade, and our upside target. First, let's discuss our stop. If you recall from yesterday, we put our stop just below this candle's low. This is a weekly chart, so this would be the low last week. I would look to move that stop up at the beginning of the week to just below 1300, a key psychological level. Of course, we are long at 1293. The second thing that is obvious and extremely bullish is when we look at the basic upside trend line that gives us a very strong indication of a former resistance area. And look at this breakout in conjunction to the fundamental events that occurred today that were the underlying factors that caused this move. I think we've got quite a ways to go on this rally. That being said, here are the levels of resistance that I think we could hit and even run through. The first level that we want to look at is going to be 1345. It is based upon a series of bodies on this weekly chart right here, and then 1361. Now that represents 1350 as the record high when June was the front-running month, but once we converted it to August, of course, that number changed. 1345, 1361, those are simply based upon tops. However, we also did a basic Fibonacci extension. The extension that we did, in essence, covers the entire wave 3, which is from here down to here. And when we do that and then project an extension from these lows here, the 0.618% retracement takes us to 1372. And traders, I believe that that is a very reasonable target. Now realize in Elliott wave, the third wave has to be the longest impulse wave. It cannot be the shortest, but even a 1-to-1, if possible, would take this market to 1433. And that, of course, would depend how events unfold in the near future. Traders, my recommendation is to maintain your current long position at 1293. We will look to move our protective stop up at the beginning of the week. And in terms of our exit strategy, I believe that our first achievable goal is going to be 1345. This has been Gary Wagner, wishing you as always good trading. I am certainly glad I was able to deliver that to you this week. Have a great weekend. We'll talk to you on Monday for the next daily update and review. Bye-bye.